Although the overall market is flat today, some momentum names staging a strong comeback, such as quantum computing stocks and the Buzz ETF. So are investors once again willing to take on riskier parts of the markets? Joining me now is Paulsen Perspectives author Jim Paulsen and Ariel Investments Vice Chairman Charles Bobrinskoy. Guys, welcome. Jim, you're concerned about economic growth here. What's the impact potentially in the markets?
Yeah, I think that the economy is fairly weak, aggregately across an array of different data. Real GDP year on year is 2%, John, and you've got employment at 0.8%. Retail sales only up 1.3. Industrial production's up 0.9. Those are really unacceptably weak levels. And I think that what bothers me is I think it's continuing to get weaker and will, I think, into the new year. The good side of all of this is I think that we're not just going to have one 25 basis point cut by the Fed, but I think the economy is going to slow sufficiently that the full focus of policy officials is going to be trying to avoid recession and restart or maintain this recovery. And I think they're going to bring a lot more policy juice. And I think it's going to continue maybe through the mid-year. And this will be the first time we've had a major full-on policy support in this entire bull market. And I think we're going to like the results as investors.
Oh, okay. Charlie, do you agree? And what's going to be the impact of you expect governments around the world to issue debt in the coming year?
And longer than that, John, I think we're going to have deficits around the world as countries, very much including the U.S., struggle with deficits, struggle with aging populations, demands for more government services. And I think we're going to see deficits, and I think those are going to lead to inflation. Ultimately, governments print money to finance the bonds that they have to issue, and we're going to be seeing that. And so I also call the economy not quite as pessimistic as Jim. I think 1-2% kind of growth is a little less than perfect, but it's not anemic. And so I think we're going to see the Fed worry about inflation, and that's going to mean that they don't cut too much.